There are 6 government programs operating in the United States right now that are holding money specifically set aside for Americans over the age of 65. Not loans, not programs you pay into going forward. Money that exists today in funded programs that was designed specifically for people your age that you may qualify for right now, and that the overwhelming majority of people who qualify will never collect a single dollar from. Not because they do not need it, not because they did not earn it, because nobody ever told them to ask. And before I go one sentence further, I need to address the assumption that is about to cost half of you real money, because it is the same assumption that costs people every time a video like this one gets made. Some of you are going to hear the words government programs and assume this is a list of welfare programs for people in poverty. If you have a pension, a paid-off house, a decent IRA balance, you are going to assume this list is not for you. That assumption is wrong, and it is expensive, because 2 of the 6 programs I am about to describe specifically benefit the comfortable middle-class retiree more than anyone else. One of them has no income limit at all, and several of them have income thresholds that are significantly higher than most people realize, thresholds that cover the broad middle of American retirement, not just the lowest incomes. The other assumption I need to clear up is that these programs are hard to access. They are not. None of them require a lawyer. None of them require a financial advisor. Most of them require a phone call or form. Some of them require nothing more than updating information you have already provided to a government agency. The difficulty is not in claiming them. The difficulty is in knowing they exist, which is the entire reason this video exists. Here's the one idea that ties all 6 together. Every single one of these programs was funded by Congress, designed by federal or state agencies, and made available to qualifying seniors. Not one of them mails you a check automatically. Not one of them sends an invitation when you turn 65. Not one of them tracks you down and tells you that you qualify. They sit in a database waiting for someone to apply. And most of the people who qualify never do. My name is Marcus Steele. I'm an enrolled agent licensed by the federal government to represent taxpayers directly in front of the Internal Revenue Service. I work every week with retirees on tax planning, income protection, and benefits they are entitled to but have never claimed. And the pattern that costs people the most money, at every income level, is not a complicated financial mistake. It is simply not knowing that a program exists and not picking up the phone. In the next 20 minutes, I'm going to walk you through all 6 programs, one at a time, in plain English. I'm going to tell you exactly who qualifies, exactly what the program pays, exactly what the income limits actually are, so nobody can say, this is not for me, without knowing the real number, and exactly what action to take to claim it. And then I am going to give you 3 bonus moves at the end for the retiree who has built up some assets, because those 3 interact with your taxes and your benefits in ways that can be worth more than everything else on this list combined. Stay to the end, because program number 6 is the one that almost nobody knows about, and the one that has made the most dramatic difference for the clients. I have walked through it personally. Let us start with number 1. Program number 1 is the Senior Bonus Deduction, and I want to spend real time on this one because it is the newest program on this list. It has a deadline attached to it, and for most seniors, it is the single highest dollar item available to them right now. In 2025, Congress passed a law called the One Big Beautiful Bill Act. Inside that law is a brand new deduction for every American taxpayer who is 65 or older. It is $6,000 per person. If you are married and both of you are 65 or older, it is $12,000. This is not a reduction of an existing deduction. This is new money, a new deduction that did not exist before the 2025 tax year. And it stacks on top of everything you already receive. Your regular standard deduction, the existing extra senior deduction you already qualify for at 65. This $6,000 deduction sits on top of all of it, reduces your taxable income by $6,000, and costs you nothing to claim. The income limits are broader than most people assume. A single filer qualifies for the full deduction with income up to $75,000. A married couple qualifies with income up to $150,000. Above those thresholds, the deduction begins to phase out gradually. It does not fully disappear until income exceeds $175,000 for a single filer or $250,000 for a married couple. The only seniors who receive no benefit are those at the very top of the income range. Everyone else gets real money. For the lower income retiree living primarily on Social Security with a small pension or modest IRA withdrawal, this deduction stacked on top of existing deductions very likely pushes your federal income tax to 0, not reduced, 0. The White House estimates that 88% of Social Security recipients will owe no federal income tax as a result of this change. For the comfortable middle-class retiree, the math is equally concrete. A married couple with combined income of $110,000 receives a $12,000 deduction. At the 22% tax bracket, that is $2,640 back in their pocket every year for 4 years. That is the urgency. This deduction expires after tax year 2028, 4 years. Every year you fail to claim, it is money you cannot recover. If you use tax software, it should apply it automatically. If someone prepares your return, ask them specifically whether they applied the Senior Bonus Deduction from the One Big Beautiful Bill Act. If they do not know what that is, find someone who does. That is program number 1. Program number 2 is the SNAP grocery benefit for seniors. And this is the program where the income threshold surprises people the most because it is significantly higher than most seniors realize. SNAP, the Supplemental Nutrition Assistance Program, is the federal food assistance program that most people associate with younger low-income families. What most people do not know is that seniors 60 and older are a distinct eligible population under the program, with different rules, different income calculations, and different benefit amounts than the general population. A single senior with net monthly income at or below $1,255 qualifies for SNAP in 2026. A married couple qualifies with net income at or below $1,694 per month. Net income after deductions, not gross income. The deductions available to seniors include a standard deduction applied to all households, a medical expense deduction for any medical costs above $35 per month, and in many states, additional deductions for housing costs that exceed a certain percentage of income. Those deductions are important because they mean a senior whose gross Social Security income appears to put them above the limit may still qualify on a net income basis once allowable deductions are applied. A retiree with $1,200 in monthly Social Security, $200 in Medicare premiums and prescription costs, and significant housing expenses may qualify for meaningful SNAP benefits when the deductions are factored in, even though the gross income calculation looks borderline. The average SNAP benefit for a senior household in 2026 is approximately $167 per month. That is $2,000 per year in grocery assistance that goes directly onto a benefit card used like a debit card at every major grocery store in the country. For a senior on a fixed income, $2,000 a year in grocery benefits is not a minor convenience. It is a meaningful reduction in monthly expenses that frees up cash for medications, utilities, and other costs that cannot be as easily supplemented. The application is handled through your state SNAP agency. You can find your state's application at fns.usda.gov or by calling 211. Many states now allow online applications that take less than 30 minutes to complete. That is program number 2. Program number 3 is the Veterans Pension and Aid and Attendance Benefit, and this one I want to be very specific about because it is the most underclaimed benefit on this entire list, and the one that involves the largest dollar amounts for the people who qualify. The veterans. Pension is a needs-based benefit paid by the Department of Veterans Affairs to wartime veterans and their surviving spouses who meet service, income, and net worth requirements. It is separate from the military retirement pension that career service members receive. It is available to veterans who served at least 90 days of active duty with at least 1 day during a recognized wartime period, received an honorable discharge, and meet income and net worth thresholds. The basic veterans pension pays up to approximately $1,442 per month for a single veteran in 2026. For a surviving spouse of a veteran, it pays up to approximately $972 per month. These are maximum amounts that are reduced by countable income. But for a senior whose only income is a modest Social Security check and who has limited assets, the benefit can add hundreds of dollars to monthly income. The Aid and Attendance Enhanced Benefit is added on top of the basic pension for veterans or surviving spouses who require the regular aid of another person with daily activities, are bedridden, reside in a nursing home, or have severely limited eyesight. The Aid and Attendance Benefit can bring the total monthly payment to over $2,200 for a single veteran and over $1,400 for a surviving spouse. Here is the detail that costs people this benefit. Many families with a veteran in their household assume that because the veteran never pursued a claim, never applied to the VA, or received an unfavorable determination decades ago, there is nothing available. That assumption is wrong in a significant number of cases. VA eligibility rules have changed over the years. Veterans who were denied benefits decades ago may qualify under current rules. Surviving spouses who never filed a claim of their own may qualify independently. And the Aid and Attendance Benefit specifically is one that many families discover only when a parent or grandparent moves into assisted living and the monthly cost becomes unsustainable. The VA has free assistance available for veterans and their families through the Veterans Benefits Administration offices in every state. You can also work with a veteran service organization, including the American Legion, the VFW, and the DAV, all of which provide free claims assistance. If there is a veteran or a veteran's surviving spouse in your household or your family, a single conversation with one of these resources to review potential eligibility is worth the time regardless of what you assume about whether a claim would succeed. That is program number 3. Program number 4 is the Medicare Extra Help program for prescription drug costs. And this is the one that almost every financial video about senior benefits mentions, but almost none of them explain correctly. Extra Help is a federal program administered by the Social Security Administration that reduces or eliminates the costs of prescription drugs under Medicare Part D. With Extra Help, there is no deductible. There is no coverage gap. The dreaded donut hole that forces seniors to pay full price for prescriptions during certain periods of the year does not apply. Co-payments are dramatically reduced, often to between $1 and $4 per prescription, regardless of the drug's actual cost. For a senior taking multiple maintenance medications, the savings from Extra Help can range from $1,500 to $4,000 or more per year. The income limits for full Extra Help in 22.6 are approximately $22,300 for a single person and $30,000 for a married couple. Above those thresholds, a partial Extra Help benefit remains available at higher income levels. And asset limits for the program are more generous than most people assume. But here is the piece that most videos never explain. If you are enrolled in any level of the Medicare Savings Program, which I described in a previous video about Medicare premiums, you are automatically enrolled in Extra Help at the full benefit level. No separate application, no additional form. The enrollment happens automatically in the federal system, which means the most efficient path for a lower income senior who qualifies for both programs is to apply for the Medicare Savings Program through your state Medicaid office, get approved at any level, and receive automatic Extra Help enrollment without filing a separate application. For the senior who does not qualify for the Medicare Savings Program, the Extra Help application can still be submitted independently through the Social Security Administration at ssa.gov or by calling 1-800-752-1213. The application takes about 30 minutes, and the eligibility determination arrives within a few weeks. That is program number 4. Program number 5 is the USDA Home Repair Grant and Loan Program, and this is the one that surprises comfortable rural retirees the most because the income limits are higher than they expect, and the program covers repairs that can make the difference between staying in a home and being forced to leave it. The USDA Section 504 Home Repair Program, officially called the Single Family Housing Repair Loans and Grants Program, provides funding to low-income homeowners in rural areas to repair, improve, or modernize their homes. For seniors 62 and older who meet the income threshold, up to $10,000 is available as a grant that never has to be repaid. For those who do not meet the grant income threshold but still qualify for assistance, loans are available at 1% interest for up to 20 years. The program covers a broad range of repairs: roof repairs and replacement, heating and cooling system replacement, electrical and plumbing updates, accessibility modifications, including ramps, grab bars, and widened doorways for seniors with mobility limitations, foundation repairs, weatherization improvements, any repair necessary to make the home safe, sanitary, and accessible. The income limit for the grant portion is set at 50% of the area median income for the county where the home is located. That number varies by county, and in many rural areas it covers households with annual income of $30,000 to $40,000 or more. The loan portion extends to households with income at or below 115% of the area median income, which in many rural counties means households with income above $50,000 still qualify for the low-interest loan component. The program is limited to homes in eligible rural areas as defined by the USDA. You can check whether your address qualifies by using the eligibility map at rd.usda.gov. If you qualify, the application is submitted through your local USDA Rural Development Office. Demand for the program typically exceeds available funding in many areas, which means applying early in the calendar year when funds are freshest gives you the strongest chance of approval. For a senior homeowner facing a $10,000 roof replacement or an $8,000 heating system failure who is living on a fixed income, this program can be the difference between staying in the home they have lived in for 30 years and being forced into a living situation they did not choose. That is program number 5. Program number 6 is the one I saved for last because it is the one almost nobody knows exists, the one that has produced the most dramatic results for clients. I have personally walked through it, and the one that I want to make sure is the last thing you hear before this video ends. Program number 6 is the Telephone and Internet Subsidy Program, specifically the Lifeline program and the newer Affordable Connectivity Replacement benefits that several states have implemented following the federal program changes. Let me give you the background because it explains why so few seniors know this benefit exists. The Lifeline program is a federal benefit that reduces monthly phone and internet bills for qualifying low-income households. In its current form, Lifeline provides a discount of up to $9.25 per month on phone or internet service. For tribal lands, the discount is higher. The program has been in place for decades and covers seniors with income at or below 135% of the federal poverty level, which in 2026 is approximately $19,500 per year for a single person. But here is the part that makes this program worth explaining in detail on this channel. 11 states have implemented their own supplemental programs that extend broadband and phone subsidies to seniors with significantly higher incomes than the federal Lifeline threshold. California, New York, Texas, Illinois, Washington, Colorado, and several others have state-funded programs that provide monthly discounts on phone and internet service ranging from $15 to $30 per month to seniors with income well above the federal poverty threshold. Some of these state programs specifically target seniors 60 and older with income up to $50,000 or $60,000 annually. Why does this matter enough to include on a list with programs like the Veterans Pension and SNAP? Because in 2026, internet access is not a luxury for a senior who manages their Social Security account online, who communicates with doctors through patient portals, who accesses prescription refills digitally, who monitors their bank account for fraud, and who stays connected with family through video calls. It is infrastructure. It is the utility that connects you to every other program on this list. And paying $60, $70, or $80 a month for phone and internet service when you qualify for a program that reduces that bill by $30 a month is $43 a month, $516 a year, quietly leaving your account for a bill you never had to pay in full. The application for the federal Lifeline benefit is at lifelinesupport.org. For your state's supplemental program, call 211 and ask specifically about senior phone and internet assistance programs in your state. The call takes less than 10 minutes. If you qualify at any level, the discount applies to your existing service provider in most cases without requiring you to switch carriers. That is program number 6. Now, I promised you 3 bonus moves, and I want to be direct about who these are specifically for. The 6 programs I just described reach across different income levels and different situations. These bonus moves are for the retiree who has built up assets alongside their income. Money in an IRA, investment accounts, a home that has appreciated. If your situation is primarily fixed income with limited assets, the 6 programs above already have you covered. But if you have built something, these 3 can interact with your income and your taxes in ways that put more money in your pocket than any of the programs above. Bonus, move number 1 is the home sale exclusion for the retiree who is still living in a home they own but are considering downsizing from. The federal tax code allows you to exclude up to $250,000 of gain from the sale of your primary residence if you are single, or up to $500,000 if you are married, as long as you have lived in the home as your primary residence for at least 2 of the last 5 years. The gain is the sale price minus your original purchase price, minus the cost of improvements you made over the years. The reason I include this as a bonus move is that one of the most common things I encounter with retirees who own significantly appreciated homes is fear. Fear that selling the home will produce a large tax bill. Fear that keeps them in a house that costs too much to maintain, that is too large for their current needs, and that ties up equity they could be living on. In many cases, that fear is based on a tax that does not exist. A married couple who bought their home for $120,000 and is selling it for $550,000 has a gain of $430,000. The exclusion covers $500,000. The federal tax on that sale is 0. If you own a home that has appreciated significantly and you have been avoiding the decision to sell because of tax fear, find out what the actual exclusion calculation looks like on your specific situation before that fear costs you another year of unnecessary housing expenses. Bonus, move number 2, is the 0% long-term capital gains bracket for the retiree who has appreciated investments in a taxable brokerage account. When your taxable income falls below a certain threshold after deductions, your federal tax rate on long-term capital gains is 0%. In 2026, that threshold is approximately $48,350 for a single filer and $96,700 for a married couple. Taxable income after all deductions, including the new $6,000 Senior Bonus Deduction. For a retiree in the window between retirement and the age when required minimum distributions begin, this bracket may be open. If you have appreciated positions in a taxable investment account, selling those positions in a year when your taxable income falls below the threshold produces 0 federal capital gains tax. Not deferred, not reduced. 0. Done correctly over several years in the low-income window of retirement, this strategy can permanently eliminate the capital gains tax on a meaningful portion of lifetime investment gains. Bonus, move number 3, is the qualified charitable distribution for the retiree who is 70 and a half or older, gives to charity in any amount, and has money in a traditional IRA. A qualified charitable distribution allows you to send money directly from your IRA to a qualifying charity, up to $111,000 per person in 2026. That money is excluded from your taxable income entirely, not deducted, excluded. It never enters the income calculation at all. The downstream effects of that exclusion are significant. Your adjusted gross income is lower. The portion of your Social Security that is taxable is lower. Your Medicare premium surcharge calculation is lower. And if you have reached the age where required minimum distributions are mandatory, the qualified charitable distribution counts toward your annual requirement. Instead of taking a forced taxable distribution, paying income tax on it, and then writing a separate check to your charity, you send the money directly from the IRA, satisfy your distribution requirement, and pay 0 federal income tax on the full amount. For a retiree who gives $2,000, $5,000, or $10,000 a year to church, to a hospital, to any qualifying charity, switching that giving from a bank account check to a qualified charitable distribution from the IRA is not a lifestyle change. It is an accounting change. The charity receives the same money. You simply direct it through the IRA instead of the bank account, and the tax savings can be $1,000 to $3,000 per year from that one change alone. Let me bring this together with the one idea that ties every program and every bonus move on this list into a single point. Every program I described today is funded. Every one of them is available right now. Every one of them is waiting for a qualifying senior to submit a form or make a phone call. Not one of them will find you. Not one of them will mail you an application when you turn 65. Not one of them will send you a reminder when you have been paying a phone bill for 3 years that you qualify to have partially subsidized. The government funds these programs and then relies on a system that is too understaffed, too fragmented, and too poorly communicated to reach the majority of people who qualify. The result is that billions of dollars in benefits sit unclaimed every year, while the seniors who were entitled to them go on paying bills they never had to pay in full. That ends when you pick up the phone. Before I close, I want to give you something to take with you. I have put together a free checklist, my 2026 Senior Benefits Protection Checklist. It covers all 6 programs with the specific income thresholds for 2026, the application website or phone number for each program, the documentation you need to have ready before you apply, the Medicare Savings Program and Extra Help Automatic Enrollment Connection, the Veterans Pension Eligibility Criteria and the free assistance resources, the USDA Rural Eligibility Map link, the Lifeline and State Supplemental Program contacts, and the 3 bonus moves with the specific tax thresholds and IRA rules. Every item on the checklist is actionable and includes exactly what to do next. To get it, go to marcusgravestacks.com/checklist. The link is also in the description below. Print it out, go through it this week, and then go through it again with one family member or neighbor over 65. Because the odds are very good that at least one of these 6 programs applies to someone in your life who has never heard of it. Here is what I want to leave you with. These programs exist because Congress decided that Americans who spent their working lives contributing to this country deserve support when the income stops and the costs do not. That decision was made. The funding was appropriated. The programs are real. What was never done adequately was the communication. Nobody called, nobody wrote, nobody knocked on the door and said, "There is money here that belongs to you and here is how to get it." That is what this channel is here to do. Send this video to one person in your life who is over 65, a parent, a neighbor, a friend. It does not matter whether they are comfortable or struggling. There is something on this list for both of them. And one share from you today could be the phone call that changes their month, their year, or the rest of their retirement. I will see you in the next one.